Hello everyone, today is the 6th of August 2026 and you may have noticed I waited 24 extra hours before posting my usual midweek update here on YouTube. The delay is because Treasury Secretary Scott Bessent went on CNBC on Tuesday where he stated that by Wednesday at the latest, the US would announce a deal to swiftly reopen the Strait of Hormuz. The statement triggered down trading algorithms that immediately started to selling crude oil futures. Everyone should know that even if the strait magically reopened in the blink of an eye, including clearing all mines in the water, it will take months for oil tanker ships to return and the flow to normalize. Ships must first empty the oil tanks of Middle East oil producers in the terminals within the strait. Only after tanks are emptied can those producers resume crude oil productions, a process that will take weeks, if not months. The first batch of ships emptying the oil tanks will take 1 or 2 months to reach their destinations. Then another 1 or 2 months are needed before they come back into the strait to pick up another load. Furthermore, unlike 2 months ago, only 23 million barrels of crude remain trapped within the Strait of Hormuz. The total amount will not move the needle whatsoever in global supply mathematics when it will be fully released. But clearly, those who program trading algorithms didn't bother to include or update these parameters. The same way, the manipulation of crude oil prices has not stopped at all. As you can see in the chart I shared about 24 hours ago on X, after Bessent's statement, prices went lower. However, pull off a very big crude oil price crash, manipulators, as we're now accustomed, had to hit the market very hard. They crashed the price by almost $7 in just a few hours, very timely and targeted dumps. Yet, as I said on X, there could not be a better proof that those placing trades rush prices are not genuine traders, but market manipulators. A genuine trader in this situation would have quickly covered his position, sending the price back to where it was after the latest Iran news. What kind of news am I talking about? After Bessent's statement, an absurd tsunami of fake news and headlines followed at some point, claiming things that made no sense whatsoever. Yet, these headlines still poured gasoline on the narrative that was meant to be pushed. Iran not only reiterated that it has no direct conversation with the US, but also clarified that its negotiations with Oman are based on agreeing on a framework between the two countries. That framework is meant to manage future traffic in the Strait of Hormuz. As I flagged again immediately on X, this framework is clearly going to formalize Iran's control over the strait, while Iran simply plays ball. As if that wasn't enough, Iran also clarified that as long as remains under threat, US military forces and blockaded by the US Navy will not reopen the strait to traffic, regardless of any management framework agreed with Oman. And yet, the market is not there to correct back up. The market also ignored the escalation in the Red Sea, with the Houthis now attacking oil tankers far north, not just near the Bab el Mandeb Strait anymore. The market will continue to ignore all these developments that are objectively not good for the global supply crisis, simply because the algorithms are wired to ignore them. They are wired to ignore more and more of these objective negative facts, like Iran again hitting another tanker in the Strait of Hormuz just minutes before I started to record this podcast. Clearly, the market remains very manipulated, as proven by the counterintuitive behavior we have been observing on the crude oil tape. The crude supply crisis continues in the real world, nevertheless, because we are still missing over 10 million barrels of crude oil supply a day from the Middle East. As I flagged in the last crude oil market update I just posted for my premium subscribers on Slice, the EIA not only is busy covering up the extent of the growing crude oil and distillate inventories, the government is definitely maneuvering to avoid a system seizure because of very low crude oil inventory levels. Follow me very carefully here. Last week, there was a very large growth reported in Cushing, Oklahoma, with inventories down to 18.6 million barrels, dangerously close to the threshold that would force the facility to shut. Everyone knows that shutting Cushing would be equivalent to a seizure in the U.S. crude oil supply market. It would send spot prices daring globally through the roof. The moment that occurs, it will become clear there is not enough crude oil left to support current consumption and refining demand. Here is what I discovered in the EIA report and shared on slides. Last week, the U.S. Department of Energy drew 2.8 million barrels from the U.S. SPR. And we saw a very coincident crude oil commercial inventory build of 2.5 million barrels. All that build has been concentrated in Cushing, Oklahoma, which recorded a build of 2.4 million barrels. Unless you believe what I just put in front of you is a pure coincidence, here is what the data in the EIA report are telling. The latest US SPR draw has been used almost entirely to keep Cushing, Oklahoma operation. It heavily lifted the facility well above the 20 million barrel tank bottoms threshold. My dear viewers, isn't this incredible? I believe so, and I'm happy to hear your comments on this, so feel free to drop them. This is the type of premium content and analysis I share daily on Slides, where I also interact in real time with my subscribers in the community chats, doing my best to help them navigate this mess of a market. If you are interested in joining my growing community of premium subscribers, you will find the link in the description of this video. Now to conclude today's update, first, I would like to flag a very important article I wrote this week about Japan and the JPY. Topic that has almost already been forgotten by mainstream media, but it remains incredibly important. In that article, which is public for everyone to read on my blog, I will include the link to this article as well in the description of the video. I not only describe what happened, something I actually predicted in the past, but also what the consequences will be for both Japan and the United States in the future. Secondly, I would like to share my view on what I believe will happen next between Iran and the United States. As I've said many times, the time factor is not favorable to Donald Trump whatsoever. Iran has all the advantage in either dragging its feet and maintaining the status quo, draining global oil supply inventories, or dealing with a new phase of military escalation launched by Trump. Clearly, everything Iran has done so far has been in pursuit of this strategy, effectively frustrating the President of the United States and building pressure on him as he gets closer to the midterm elections. Now tell me, what do you think will be the electoral outcome if a U.S. oil crisis erupts during the campaign that is about to start very soon, sending diesel and gasoline prices in the U.S. through the roof, of course, is likely to result in an unfavorable election outcome for President Trump. If he loses control of both House and Senate, then we surely face the threat of impeachment. The threat, even if it ends up not being successful because a two-thirds Senate vote is needed to remove him, will surely undermine his negotiation capabilities significantly. It will pave the way for a very new, different type of president who will take office in 2 years. The president with whom Iran plans to resume peace negotiations, considering they have clearly completely lost trust with the current U.S. administration. This will result in the current situation in the Middle East, at the level of disruption in the crude oil market not ending anytime soon whatsoever, until there is a significant change in the status. Let me be clear. The change in the status quo could even be triggered by a successful U.S. military operation, although it has very low chances of success, but not zero. As I said, Iran's strength so far has been to protect most of its military supplies well inside strong mountains. If the US military were successful in launching a strike and quickly closing all entry and exit points to those mountains, then Iran would not be able to take out missiles and drones to retaliate against all the oil infrastructure in the region, ultimately triggering a massive crude oil market shock. I believe that is enough for today. If you want to support my channel, don't forget to like the video, subscribe, and turn on the notifications so you don't miss any of my future updates. Thanks a lot for subscribing on Slice, for supporting me on X, and for reading my research on JustDario.com. I wish everyone a nice day. Bye.